In this week's video, we'll review the latest charts and data to help us answer the question, is a major shift taking place in the markets? In this abbreviated Black Friday video, we're going to be looking at SPY, IWM small caps, XLY consumer discretionary, the equal weight S&P 500, lower left-hand corner of your screen, RSP, XLK tech, and XLF, the financial sector ETF. As you can see on your screen, upper left-hand corner, SPY, we've got the 20-day moving average here in blue all the way out to the 250-day moving average in black. This is a strong and healthy trend look during the trading session on Friday, November 29th, Black Friday, a little bit after noon Eastern Time. Given what we know today, we have a healthy bull market. Thus, for the remainder of the video, we're going to focus on leadership, while keeping in mind that all of these charts look healthy in isolation. So weekly cloud chart of the S&P 500, 2013, full year 2014, and into the spring of 2015. We're showing this chart because it's an excellent example of a strong weekly trend. This is the type of cloud chart that we want to invest in. This is the type of instrument that we want to own. From a longer-term perspective within the context of a secular bull market, we want to own things that have charts that move from the lower left-hand corner to the upper right-hand corner. You can see during this entire journey in here, for the most part, we're checking all of these bullish boxes in the upper right-hand corner of your screen. Thus, on a relative basis, it's helpful to know. While tech on a relative basis has been weak in recent months, this is a chart of SPY relative to XLK. We're looking at the same type of chart, a weekly cloud chart. You can see for the most part, looking back to 2013, this ratio is moving from the upper left-hand corner of your screen down to the lower right-hand corner of your screen. And yes, it has made some improvement in recent weeks, but not a lot of improvement relative to trying to flip the longer-term trend. And if we zoom in on the chart during the session on Friday, November 29th, we are checking some of the bullish boxes, but this is a mixed bag. The cloud is flipped back to red against SPY and in favor of XLK, and blue has dropped back below red. The moral of the story here is, you can see during a strong trend, our red, blue, and green spans are well above the cloud, and price is well above the cloud. When you have price and all of your spans near the cloud, that's basically an indecisive market, not the type of trend that we want to invest in. It's also good to keep in mind, from a price perspective, if we draw a trend line on the ratio of SPY relative to XLK, it is a downward sloping trend line. It is possible during a counter-trend move within the context of an existing downtrend that you make it all the way back to the downward sloping blue line. It's possible it may or may not happen. But in its present form on November 29th, this chart really doesn't look anything like a strong, long-term bullish weekly trend. The same can be said for small caps IWM relative to XLK 2013 out to the present day in November of 2024. Consumer discretionary has made some progress. We're on the other side of the cloud, but you can see in 2022 that happened. You can also see that it happened here in 2018. We still have all three spans on the wrong side of the cloud, and while we respect the improvement on the chart still has work to do if it wants to try to look more like the chart of a strong weekly trend. Same concepts. We're looking at the equal weight S&P 500 relative to XLK. All of the recent action down here in 2024 taking place below a red cloud now. The cloud has flipped back to green, but it looks like it's trying to flip back to red. All three spans and the ratio are below a downward sloping cloud. Once again, this doesn't really look anything like this. Same concepts, weekly cloud 2013, left side of your screen, all the way out to the present day. Financials XLF relative to XLK. There's no question there's observable improvement down here. And now we have the ratio above the cloud. The cloud is flipped from red to green. Those are all good things. But if we look at the exact same weekly cloud chart after Trump was elected the first time, December 30th, 2016, for the most part, we're checking all of the bullish boxes. We were doing so for a short period of time, just a few weeks. And you can see the look of the cloud here. It's flattish. The spans are still near the cloud. It's somewhat indecisive, but unquestionably a lot of improvement in here. But this small chart here on December 30th, 2016 still hadn't taken on this type of look. But a lot of good things are happening down here. But we want to see a sustained move, more than just a few weeks, because the performance in XLF relative to XLK walking forward from December 30th, 2016 was not particularly impressive. This is a performance graph, 12/31/2016 to October 3rd, 2018. Walking forward from this look here on December 30th, 2016, XLF posted an impressive 24% gain, but SPY did even better at 35%. Large cap growth stocks almost doubled the return of XLF at 50%, and XLK, the tech sector ETF, beat them all with a gain of 61%. So we'll keep an open mind about all of the improvement that we're seeing on a relative basis. But we also have to keep in mind that the chart of XLF relative to XLK unquestionably, for our time frame, a longer-term time frame, is moving from the upper left-hand corner to the lower right-hand corner. And we know we want to invest in things that go from the lower left-hand corner to the upper right-hand corner. And if we come back down to the right-hand corner of the screen, the present day, there's zero question this is a much improved chart. We're starting to check a lot of the bullish boxes. But the ratio is clearly still in a longer-term downtrend. Step one of a trend change would be to break the downward sloping trend line. We haven't even done that yet. Could we envision, even within the context of existing downtrend, the ratio making it back to this downward sloping trend line and financials outperforming XLK for several more weeks or months? Sure, very possible. But this type of chart has a lot of work to do to look like this chart. Semis have been weak in recent months. We peeled off about 5% of our position, meaning we kept about 95% of it. This is the equal weight S&P 500 relative to SMH or semis. You can see it's still clearly in a weekly downtrend. And logically, if XLK is going to underperform the other S&P 500 sectors, or the Magnificent Seven are going to underperform the other stocks in the S&P 500, at some point, logically, you would think that RSP, the equal-weighted S&P 500, would flip to an uptrend relative to XLK. We don't have that yet. This is November 29th, 2024. Let's zoom in on this improvement because, again, there's no question RSP has been outperforming XLK. But if we look at a daily chart over here, you can see the ratio on November 29th is not really near this high that was made, the relative high in August, nor this relative high that was made in September. So on a relative basis, market participants are really less interested in RSP relative to XLK in terms of how they felt in August or September. All of this sideways movement tells us for the most part, since August, this ratio has been in a trading range. So RSP has had no clear advantage over XLK. Obviously, that's subject to change. And if the cloud chart down here starts to morph into something more like this, and this ratio here can go on and exceed this high from September and exceed the high from August, then we would be open to adding to our relatively small position in RSP. And if we look at the average price of the ratio of XLY, if we anchor it to this point here in 2020, XLY relative to SPY, you can see the average price of the ratio, that line is still downward sloping. Moral of the story is XLY relative to SPY still has a lot of work to do if you want to flip this type of chart into an uptrend. A good first step would be to exceed these highs here. This is July of 2023. This is November of 2024. You can see the ratio made it back here during a counter trend move and failed at the blue and orange lines in 2023. It failed in a similar area in calendar year 2022. We're still below those same lines, and even if we exceed them, we'd still have to deal with this red line here. I'd really prefer to invest in things that have these colored lines sloping upward from the lower left-hand corner to the upper right-hand corner. You can see that's not the case on this ratio chart. So right now, this looks like a counter trend move within the context of an existing downtrend. Keep it in mind that XLY looks great in isolation, and XLY has been outperforming significantly for several weeks in 2024. The same can be said for XLF relative to SPY in terms of it has a lot of work to do if you're going to flip the long-term trend in favor of XLF relative to SPY. A good first step would be to clear these lines here, and it would be more impressive if you can clear this orange line here that's tied all the way back to this point here in the ratio in the 2007-2008 window. But again, we have a ratio that's moving from upper left to lower right. In isolation, XLF looks great. CCM market model follows over 330 ETFs, so for the most part, everything is on our radar, including IGV software stocks. We already own SCHG large cap growth stocks, and while software has outperformed significantly, it really hasn't done much relative to SCHG to break this downtrend. If the ratio can get out into this area here, that would be very, very impressive. And that absolutely positively may happen very, very soon. It just hasn't happened yet as of November 29th. And in terms of the charts in isolation, concerns would increase if the charts on your screen start to morph into something more like this. This is the rollover process in SPY in late 2021, early 2022. You can see the chart here, upper center portion of your screen, SPY. This is October 12th, 2022. This rollover look really doesn't look anything like the charts that we have in hand on November 29th. And we all know the only way that we can react to a shift like this is if we head into next week and every week with that flexible, unbiased, and open mind. The material in this video has no regard to the specific investment objectives, financial situation, or particular needs of any viewer. This video is presented solely for informational purposes and is not to be construed as a solicitation or an offer to buy or sell any securities or any related financial instruments, nor should any of its content be taken as investment advice. Any opinions expressed in this video are subject to change without notice, and Shivako Capital Management, LLC, or CCM, is not under any obligation to update or keep current the information contained herein. CCM and its respective officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. CCM accepts no liability whatsoever for any loss or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decision.